Well, we're here again with Daniel Carney, financial advisor from Goodlife Financial Advice. It's becoming a bit of a long-running series now.
Thanks for having
Today,
me.
yeah, nice to have you with us, Daniel. Today, actually, because what I wanted to talk to Daniel about was NFTs and talk a bit more about crypto as investment vehicles. But actually, Daniel, your comments were we need to take a step back and look at behavioral investing or behavioral finance. Uh, so my reaction is Sewa. Yeah, so maybe you can tell us about what you're talking about, Willis. Maybe you can tell us about that, and I guess and it does lend nicely into the events of what have happened last year with NFTs, what's happening in the news right now with investor concerns due to events in Europe, etc. So perhaps first, this was a new concept to me, behavioral investing or behavioral finance. What does that mean?
Yeah, so there's been a number so I've been in this particular kind of game, I guess, for just over 12 years. And over that 12 years, there's been a number of things that have happened along the way, starting that journey with the GFC back then. But there's been a number of things along the way where it might be a tax policy change that's going to affect property, could be a war, could be something that is apparently happening to the property market and that gets put in the papers. A number of things. There's been a lot of them along the years, and they sort of come along and then they go away and they've quickly forgotten. But it just amazes me how much those things affect people and affect their investment decisions. So yeah, when you sort of put on the table this idea of chatting about NFTs as an investment and even cryptos as an investment vehicle, I think for me, one of the big things that stood out was the hype that was around NFTs last year and how that hype inevitably led to people pouring into that space last year and paying insane amounts of money for those NFTs. So again, behavioral finance, they're seeing it's fear and greed, right? People investing or not investing because of fear and greed. So that was kind of, I thought, well, that to me was a big driver, and I wanted to talk more about that. But that does spill into what's happening with the share markets, the Ukraine war situation, what they're saying about inflation at the moment, rising interest rates at the moment, New Zealand property prices at the moment, and how that's affecting people's mindset. And I really just wanted to, just expand on that with you, over and above NFTs, as to how, ultimately we'd like to educate people and our clients as to how they should be making their decisions, rather than what does the Herald say this week, or what buzz is happening online right now. That's not how we want to be making our decisions. So yeah, that was why I sort of wanted to expand a bit on what you had put on the table.
So behavioral investing or behavioral finance really is not a good thing. It means that you're making your decisions to invest, to sell, based on the whim of the moment or the events of the moment, rather than a well-advised, well-thought-out, calculated long-term strategy. So would that
Yes,
be correct? Okay. So if you
correct.
heard that, thought, oh wow, behavioral investing is like that's really bad. Yeah.
Well,
Okay.
unfortunately, as you say, it's not the right way to look at things, but unfortunately, it is. Well, you only have to look at the markets to see that it is extremely the norm, and no one can predict it or create models off the back of it, really, because it's based on feelings rather than, I don't know, the price earnings ratio of a company or supply and demand or whatever. So
I'll just jump in. So an example of that would be there was, I just saw like the price of oil has gone to US $100 a barrel because Russia has moved troops into eastern Ukraine. And at the same time, I read that investors are fleeing from Bitcoin because they want less volatile currencies. So this is typical share market, typical behavioral investing that happens all the time, but it's nuts, right? And it's ill-informed and ill-advised.
Yeah, it is. And look, we can't beat people up on it, but it happens. And there's famous quotes. If people are fearful and getting out, well, it's time to get in. If people are piling in, well, maybe it's time to be getting out. Because a lot of the markets are driven by that fear and greed, and there's a lot of people that make a lot of money off the silly decisions that the majority make. I guess what we're here to and our wider network, which includes yourself, what we're here to do is to help people off the edge of that cliff and to make the right decisions, to take a step back and objectively, not emotionally, look at the whole environment, why they're doing it, what's the long game, not is Putin sending troops into Ukraine and should that change my decisions on doing this, or my portfolio's dipped a bit, so should that change my decision? Or TV3 ran a news item about property prices dropping. Should I base my decisions on that? No, we want people to be seeking the right advice from people that they hopefully trust and learn to trust, and make their decisions based on that.
Yeah. Okay, well, that's really sound advice, because I think you try and do your best. You don't get much, if any, financial education from school. So generally, we're basing our decisions on what we learned from mum and dad. Maybe we got some training or did some study which has equipped us a bit better. But of course, a person might go through even a university course and still not come out and really be financially savvy, because it's one thing to learn, but it's another thing to apply that knowledge, right?
Mm-hmm.
And hence the value of having a network of trusted advisors around you. So that being the case, then that makes a lot of sense. Okay, avoid emotion. And I guess it's easy to do, isn't it? Recently, I had moved some crypto from one currency into another. And yes, I did that as a taxable disposal, if you're watching. And for anybody else, we will talk a bit more about that later on, about this sort of thing. And then the currency has since dropped, and I just have to remind myself, actually, don't worry about that. This is a 10-year investment. So these things are going to happen. The markets are very volatile at the moment. So you do have to have give yourself a little talking to almost at times, to not respond in a behavioural manner to your investments, right?
Correct. Yep, totally. Yep, the mantra is stay the course. Stay the course. These things are going to do what they're going to do. If you've bought right and you're in the right kinds of investments, then stay the course. Potentially you did get sucked down a rabbit hole and got yourself into something you shouldn't have got yourself into, and maybe it is the right thing to be getting out of that. And it's widely agreed that probably 2022 will be the year of potentially these peripheral altcoins, cryptocurrencies, being flushed down the toilet. And your mainstays are the ones that will, your top 10, top 20 are the ones that will stick around. So perhaps it is time to be getting rid of those things, but you do your research and you seek advice, and then you make your decision.
Yeah. And I guess one has to be pragmatic. The reality is that in your investment portfolio, it was unrealistic to expect that probably everything you invest in will always give you a return. I.e., you have perhaps your property investments, you have some money in the bank, you're not getting a great return, you need a bit of liquidity at the moment. Maybe you're using something like managed funds and you can get that back within 3 days, but you need a certain amount in cash. But that is going backwards because of inflation. Now, you can't do much about that other than sort of try and minimize that amount of liquidity, or have something available like some kind of overdraft or revolving credit facility. But I guess we've also got to be realistic, correct, about our expectations, and that sometimes you might invest in something like, I think a key example is in the past, it was about 2017, bought some Bitcoin, sold that last year, and that was great. Made some money on it. Yeah, and yes, again, that that is being declared. I'm just keeping myself safe here, right? But at the same time, that one particular currency, I thought, oh, this is good. We'll get some of that, and that's gone from $250 to $30.
Yeah.
So, but then I had limited my exposure. I didn't want to put 10 grand into this to a loss I would consider acceptable. So, is that a realistic comment? You get all the best advice and you make your decision, but also just be realistic that not everything will always give you the best returns. That's not realistic in this world.
That's right. And some things may be, negatively correlated. So while some things are up, other things are down, and you may have a portfolio that performs that way. But you're right. Sometimes not everything will work out or perform how it's supposed to in the long term. We'd like to hope that our goal is that our clients are in tried and tested long-term investment assets or relationships. So that's why we really only, advise around residential investment property, managed funds portfolios that are age appropriate, and clients understand the time in those assets, and KiwiSaver as well, which you're forced to keep that in there. So you might as well have that in the correct place. So, if people want to be speculative, and as much as it pains me to say it, probably that is the crypto side of things. That's why it should make up a small portion at the moment of your overall investment bag. But if they're going to be speculative, then they're going to see more volatility, and they're going to see some things that don't work out. And as long as overall you're right, as long as overall you're ahead, then we're happy. So that's to be expected, especially if you're playing around in the NFT and crypto space.
Yeah,
that's why I am big on sticking with the big names, the big players, and having a long-term outlook when it comes to crypto.
Yeah. Would you suggest that if just some informal surveys we've done on LinkedIn suggest perhaps about half of people are either in crypto or are seriously looking at it, another 30% are maybe, and sort of another 20% are no way. So would you suggest then, if that's the space you want to be in, that it is worth spreading your investments perhaps a little bit over coins? Like you've got your main ones like Bitcoin and Ethereum, for example, but then you have sort of a number of other coins that say would support staking, like Cardano and I don't know, Algorand and Phantom and so forth. Although Phantom and Link say not necessarily in the top 10, but would you suggest a bit of a spread in that space there rather than putting all your eggs in one basket, or any thoughts on that?
I think, funnily enough, I was just asked that question from a client yesterday. And I would say, the lion's share should be in Bitcoin, and then close second Ethereum, as you said. And then if you want to have a spattering across the other coins, do your research. Do your research and make sure you're putting it into the right place. It's a hard one for me because I don't live and breathe the crypto space. I do have a spattering of other altcoins, but the recommendations that I get a lot from who I would consider to be the experts out there are to not get in unless you've done your research, and there's a solid use case for that crypto. There's a solid developer team there, and it's the right price. And unfortunately, there's a lot of people that yell and scream at you on YouTube. And you can almost find a yes to anything that you want to invest into on YouTube, but you really got to get through that and find those that look at the stats, the mathematics, the developers, who are they, or what kind of team have they got, the management, what they're achieving, what they're set to achieve, or whether it's a dying coin that's being overshadowed by something else, and it's likely that that's not going to go anywhere. And that's why I do really believe that that's what we're going to see. I believe we're going to see NFTs. I think that's probably a bubble. I don't know. I'm not trying to burst anyone's bubble by saying that, but I just think NFT, the heat's going to come way off that, and I think also all of these altcoins are going to fade away as the big players with the speeds and the use case and the good teams and everything. I know I keep saying that are going to rise to the top, and they really are the ones that people want to be putting their money into. But the big players should be the lion's share. If you're going to be in the crypto space, first of all, extremely volatile. Expect a bumpy ride and a long-term ride. I always say to people, don't expect to look at that until 2030 with crypto. But the lion's share, I believe, should be in your big players, your Bitcoins, your Ethereums, maybe then your Solanas, and ones that you mentioned as well. Key players that I keep hearing. So, but they should make up a small portion. The lion's share is that Bitcoin, and then percentages. That's a really good question. Maybe 70, 60, 70, 80% Bitcoin, 20, 30% Ethereum, although mine doesn't look like that. And then the rest is spattered across coins you've researched and you feel could potentially be a close player to your Ethereum, for example, because Ethereum and Bitcoin are quite different beasts. So what's a close player to Ethereum? What's something that could, as they say, be an Ethereum killer? I don't know if that's necessarily going to happen, but has a strong use case there that could be nipping at the heels of Ethereum, and you spread yourself across those. So that if they don't work out, you've got that one, and that one did work out, and you've done very well off it. So yes, I am a big believer in spreading your risk and spreading your bag wide, but not to put a large chunk of your portfolio into those smaller players, to put it into the bigger players.
And just, I guess, for thoughts on the taxation side of that, have a look at our earlier discussion about the taxability. One thing just to note is that IRD, we'll just touch on it briefly. You're a trader or you're a hodler, right? Hold on for dear life. And if you're a hodler, really, you need to be staking to do that. We feel otherwise IRD are going to say, no, that where's your proof that you actually were an investor, as it were, and that your sale proceeds eventually were not just speculation. So staking essentially is, as we mentioned before, a bit like giving money to the bank. They put in a term deposit and then they pay you interest, and the interest is taxable income, but not when you get your money back. So it's the same with this. With staking, that you're saying to the blockchain, here's my currency, use that for transactions. It's a proof of stake based system, and then I'll get rewards, which are taxable income. Now, it's worth noting that Bitcoin is proof of work, not proof of stake, so obviously that doesn't apply there. Ethereum is moving to a proof of stake model, but at the moment is not. So that's something to watch. But there are increasingly altcoins, as Daniel said, that are proof of stake, and therefore they allow you to do that. So in our view, really, that's the only way that you have any convincing case that your investment is like that as a hodler, that you are not holding it to speculate. Therefore, we feel you haven't got a leg to stand on unless you are staking. On the other hand, if you're a trader and you're buying and selling, that can work. And for example, we've seen scenarios where somebody sold coins, made a loss, bought the coins back straight away at a cheaper price. Now they're a trader, so now they can claim that loss against their portfolio, but they've still got the same coins. And there's a little bit of fees, but in the big picture, that was neither here nor there. That can work, but you have to know what you're doing, because it's also a real easy way to lose a lot of money. So we would say it's not for the faint-hearted. And echoes your comments here, Daniel. Do your research. You've got to know what the market's doing if you want to make some success as a cryptocurrency trader. So two different sort of beasts. You're either a trader or you're a hodler, and make it clear what you are, we say, by staking if you're going to be a hodler, where it's available to you.
Right.
Yeah.
Good
and
advice.
Just thing I will chuck in, a little thought we'll throw in on there, two thoughts actually, and then we could maybe talk a bit about, NFTs, should you, the whole bubble thing, is cryptocurrencies are not subject to GST in New Zealand, but NFTs are. Because it's so, and again, the rules apply. It's if your revenue from sales exceeds $60,000 in a financial year, then you've got to include the GST part on it. However, because NFTs are often anonymous, it can be difficult to determine if the consumer is in New Zealand and therefore subject to GST, or if they're overseas. Just remember, GST on exported goods is zero rate for GST purposes. So there's a little bit of complexity there to get that right. You don't want a situation where you have to pay GST but can't claim it. That could be a bit, well, it's a 15% haircut. So there's that sort of thing to think about as well. And the other thing that comes to mind is, if you maybe had crypto, you sold it, maybe like I said, bought it a few years ago, sold it, made a killing, and just converted the proceeds into another crypto coin or more of the same, there's still tax to pay on that unless you had staked and didn't have a pattern of buying and selling, etc., or that your whole position indicates, yes, you are a hodler. So just because the fact that you converted the proceeds into another coin or whatever, ID will be looking for that taxable income to be declared. So there are various gotchas to be aware of.
I think that's why people need to be getting advice, and they need to be paying their taxes.
Yeah, from an accountant that gets crypto, as it were. So that really leads us to, round to this whole, behavioural investing. We've talked about that. That's a bad thing, happens all the time, but avoid it like the plague. Get your advice from your team, right? Talking to your financial advisor, get the accountant's input, and it's probably a good time to be talking to who should own our investments. That's some legal advice. How do we insure our investments? That's some risk advice. So, talking about investments as a whole then, and you've sort of said, if you want to do crypto, make that a small part of your portfolio because it's highly volatile. I think I've heard perhaps 3% or less. NFTs are bubble. So does that mean that, don't touch some of the barge pole, or just proceed with caution and be sure that you are not overpaying, that you buy an expensive white elephant that then costs a truckload to feed, and the neighbors start complaining about the manure?
Look, in full disclosure, I don't own any NFTs, so I may get rained down on, but I guess fundamentally for me, the biggest issue I have with NFTs is that they are inflationary. And what I mean by that is, it's not like Bitcoin, which is deflationary, right? There's going to be less and less and less of it, and more people wanting it.
So it will increase in value.
Yes. Yeah. Whereas NFTs, Nike could come out with a NFT of this shoe, and then they change the color of the shoelace, and then they release another one, and then they change the color of whatever, or the way the shoelace is pointing, and release it again and again and again and again and again. And they can just keep releasing and releasing and releasing and releasing them. And so can anyone. Just by changing something small about that file, re-releasing it, or releasing a certain number of them, and then doing it again. And look, there could well be there is a very strong market there, and investment opportunity there. But I think there was a lot of hype around it, and I do wonder whether it will be a bubble. And so I put NFT investment, in my mind, in the same, and I don't know where I'll be in 1 to 5 years' time with this, but in my mind, I put it into the same category as I would investing into wine or art, or I was in the loo the other day at a bar and they were selling stamps behind the toilet door. You could ring this number and sell them your stamps. Same thing, you know. I think it's a very specialized environment. I think there's going to be winners, but there's going to be, I reckon, a lot of losers. And you really need to know what you're doing. And again, just don't get caught up in the hype. Do your research, and I think be afraid when it's inflationary. If they can just keep pumping them out, then where's the scarcity of that? And this is why, I'm a big believer in investing into things like that. And this is the way Ethereum's going, is deflationary as well, hopefully. And that to me makes sense. So I'm still looking at this from afar and deciding, is it something? I nearly got into it, I must admit, but I've held off. And the big turn off for me is because anything that I do is a long-term thing, personally, and I guess for our clients as well. It's a set and forget long-term thing. So we'd like that thing to grow in value over time, whether that's Bitcoin, property, shares, commodities, whatever, or your portfolio that you've got, say, managed funds that houses all of those assets. We'd like that to grow over time. I don't know whether I'm getting that with an NFT. I don't know whether it's going to just go because another 7 million of that same thing was created. So that's my headspace around NFTs is don't get caught up in the hype and be careful of how inflationary that space is. And I'm just in the sit back and wait mentality with it at the moment. I'm not poo-pooing it for sure. I think it's great, and I think it's good for artists and musicians. Dan Carter's trying to create things in that space. I believe Nathan Haynes and some other New Zealanders have got on board with that. So that's great. But I would approach it exactly how I would approach, well, should I invest into this wine? Should I invest into that artwork on the wall? It's very easy for someone to get hyped up and tell me about how great it is, but how do I know that that's correct? I was in a restaurant the other day, and there was a sommelier that was talking to us about wine, and he was a French guy, passionate as anything about it. And spending 20 minutes with that guy, I would have bought anything he put in front of me, and said, hold on to this for 5 years, it'll be worth it. But as I came away, I was thinking, yeah, but hang on a sec, that's one guy's opinion. How do I know that that's a correct opinion? So I'm very cautious about the NFT space, and I'm just sitting back to see how it plays out. Yeah.
So that's very interesting, and I guess it gets back to the point that we were discussing right at the beginning, Daniel, wasn't it? That behavioural investing could be, I met this cool French sommelier, and he said I should buy this wine. Well, is that sound advice, or is it behavioural investing? Well, actually, it's probably behavioural investing, which is not likely to get you the best outcomes. So it means whatever it is, it comes back to that same thing, isn't it? Avoid behavioural investing, being blown left, right, whatever, by the winds of whatever's happening at the moment, and deal with trusted advisors. Would you agree there, Daniel? Does that make sense?
It wholeheartedly makes sense. Yeah, deal with trusted advisors who have been in the game for a long time, who have been in the game itself has been around for a long time, and where is it going? We don't make our decisions on a Herald article or even what the Reserve Bank says may or may not happen in the next year with house prices. We're not doing it for the next year. We're doing everything we do for the long term. Yeah. It's a retirement plan generally. So get advice from the right people who are experienced, and there is massive amounts of historical data to back that up, as well as projected data to back that up as well, and make your decisions based on that, not on, as you say, the whims and winds of the world and what that's saying in any thing that's happening in the now, that's always going to be there. We want to look at the long term, and we want to get the right advice from the right people.
Yeah. Well, no, that sounds very good. We appreciate that sort of objective view about investments, and so folks. As always, Daniel's contact details and for Goodlife will be in the comments. And when you want to talk about the tax side of things, give us a shout. Thank you again for sharing some of those insights. I think there's a bit to ponder and chew over there today. We look forward to future comments and revelations in this space.
Thank you. Thanks for listening to my ramblings.
Nice to have you with us, Daniel. Until next time.
Thank you.